Alright, ladies and gentlemen, welcome back to the Simple Markets channel. This is Coach JB, and we are going to be going over a blockbuster start to 2026 for me. I have had a ridiculous amount of winning trades, very close packed together here, and very few losses actually for the last few weeks. Despite starting off my year with a couple losses, we have been on a ridiculous run. So I'm going to be going over actually each of the winners that I've taken this year. I'm going to talk about the similarities, some common mistakes that traders make using the strategy, and then hopefully allow some of you guys who haven't been having as good of a run in January and early February to maybe compare yourselves in the trades that you took to myself, if of course you are using the simple market strategy. But before we do so, we're going to hop over here to the community because as always, everyone here is killing it. We are now up to 68 funded members. Every single day, I feel like we're seeing more and more members get funded. We have one here, says it's low-key the best feeling. AZ has more accounts than I can even keep track of at this point. We have another member who mentioned he joined in just December, acted with discipline, passed the 5K, and he mentioned he struggled in Japan. There isn't such great communities, and he's honored to have found our community. So a huge congratulations to him. I'm glad you found us as well. And then per usual, if we hop in the profit and losses channel, we have, just yesterday, a payout certificate from Lucas. Maxi is about to pass his account. He's literally one dash away from it, and he will be joining this funded members section as well. Another member here who passed another account, and Tommy here with a small payout coming out on his 100K account. And then we have Tish Money here who not only one payout here, but last week got 2 payouts and literally within 7 days has made just under about $6,000 in funded payouts. Everybody here uses the 4-hour trading strategy, and more importantly, everybody here trades the 4-hour time frame. I get this question a lot. Some people really think that the 15-minute or 1-hour time frame is better. There is a reason why every single funded member here trades the 4-hour time frame, and those of them who started trying the 15-minute or 1 hour very quickly switched back to the 4-hour time frame. I might even make an entire video on reasons because of that. Would this strategy work on the 15-minute or 1 hour? Yes, it would. Would it be significantly more difficult and harder to maintain consistency? Absolutely. It would. Trading more passively, having more time in your day, having less stress and less trading psychology, all on the 4-hour time frame. To me, it is a win, 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 win. Please, guys, keep an open mind. I was someone who was so against swing trading for so long because everybody on social media pushes the idea of day trading. Make it easier on yourself. Make some real profits going into next year, because if you're not moving out of your comfort zone to try something new that is clearly working so significantly well, then at that point, it becomes your own problem, and I cannot help you with that any further, unfortunately. But for those of you watching this with an open mind, give it your best shot, and I really hope that you see the same success our community is. But without the yapping, let's take a look here at some of the trades that I have taken starting in January and heading into early February. I mainly want to go over the winning positions today because we have had an absolutely ridiculous start to this year. I am up 17 RR in just about a month and a half. My win-loss ratio is 73.3% currently. That does include break-evens, however. It cuts down to about 63% when you remove these break-even trades here. But without further ado, let's go one by one here and talk about these trades. My goal with this review is to really kind of hammer down on some of the common questions I get in my DMs about trades. Starting here with USD/JPY. Now, I took this buy position here because number one, we are very clearly seeing a bullish trend. We have the break of structure that occurred. We have a lot of liquidity in here that was eventually pushed out, and then we break higher with a fair value gap. So as always, slap that fib on the 75% level we enter, and very quickly we ran TP here. Nothing special, but one of the first things I want to talk about, I had questions about why I didn't take this larger range here. We have a break of structure, we have some liquidity taken, we have a fair value gap. This is a very common term you will hear me refer to even in past videos, but I personally will take the most recent trading range that follows my rules. I will repeat that, the most recent trading range that follows my rules. The reason I repeat that is because it is a very common question I get. When we see the break of structure here, the sweep on liquidity, the fair value gap, it is perfectly fine to go ahead and set your order here at the 75%. We never quite reached it, and then as time goes on, we eventually break structure and have a new trading range that formed that followed every rule. 10 out of 10, 11 out of 10 times, I will favor that most recent range that follows my rules, compared to holding an order for far too long and letting price run without me as it would have here. More importantly speaking, you can even see here, we're in a general bullish range. I love to take the bullish trading ranges here. We could see we have a sweep on liquidity here, a break of structure, but there is no fair value gap within this range, and that is why I wouldn't have taken something like this very small range here. We also didn't really quite get a candle close above the high. But then again, there is some traders in my community who did catch this small range and then went ahead and caught this range and essentially doubled the profits on the same move. It's perfectly viable, but you got to take the strategy and find your own style with it. Next up here is AUD/JPY. Now, another common question is, JB, you have 3 correlated pairs here that you started your year off with. Why did you take 3 correlated pairs? Do you cut your risk down? Do you avoid correlation? I've said it before, I really don't care about correlation here. In fact, I took 2 losses on JPY pairs before taking these 3 winners. So in my books, that is a complete win because 3 winners for me is 9 RR and 2 losses is -2 RR. Even if I took 5 losses before this, it would be in the green. Even if I took 8 losses on JPY pairs, I would still be in the green. That's what profitable trading is about. Based on my win rate and my statistics, I will gladly put multiple different trades on the same trading pairs or JPY pairs or USD pairs. But as we could see here, very simple and easy. We are working upward. And once again, that most recent trading range that we're looking at on the chart here, we swept liquidity, we broke structure, we have a nice fair value gap in here. Another question I commonly get, does it matter that the fair value gap was filled? It does not. The general idea here, guys, is that the fair value gap shows high volume when breaking structure. Just because we come in and fill that gap doesn't mean that there wasn't high volume when we broke that initial structure. This may be contrary to some of you ICT guys out there who enter on the fair value gaps here. We are not using it as an entry, we are simply using it as a confluence to our entry model. We enter on the 75% of the range here, and then as we did, we run very quickly to TP right after. Next up here is �chef/JPY. Now we have a long range of liquidity here. We sweep below that range and then break structure higher, following that overall bullish trend we're seeing. And then very quickly, guys, we tap right in and then run to TP for another 3R. This is almost identical to pound JPY. We saw a really ugly kind of sideways range here. We sweep liquidity of that last low. I, in fact, actually took this position before it and took a loss on it. And then as we saw that sweep and broke again, I was willing to go right back into it. I understand my entry model. I understand the probabilities behind it. This loss does not scare me out of pound JPY. And if it did, I wouldn't have been able to capitalize on this trade, which I was able to here. Once again, a fair value gap, a sweep on liquidity, and a break of structure. Taps me in and very quickly runs to take profit. If we look at some of these trades here, they are literally identical, and honestly, that's how your trading plan should be. We have another very sideways range here in a super clear manipulation and sweep of liquidity, followed by a very aggressive break of structure. This one needs no more. Taps me right in at the 75%, and then we run to TP right after. Super clean movement here, super clean manipulation as well. Next up is NZD/JPY. So we are once again following that bullish trend on price action, making higher highs and higher lows. Price sweeps these 3 or so candles of liquidity here with this very aggressive wick. We then break structure to the upside here with a fair value gap, tap me in, and very quickly once again to 3RR. I sound like a broken record, guys, but keep in mind I am showing all winners here, and obviously all of my trades are going to look very similar. That is the goal of a trading plan, and especially one as simple and mechanical as ours. And last but not least is EUR/AUD. Now this one tapped within the last day for me, but we just very simply, bearish trend overall here, a sweep on liquidity, break a structure to the downside, a good fair value gap. That is all you need, guys. Throw your Fibonacci on there, trust the process, trust the probabilities, and once again, you will be paid out. Absolutely killer start to this year for me in 2026. If there are any follow-up questions when you see a bunch of these trades, shoot me a DM, guys. I literally answer every single DM I get from subscribers. I'm not going to sit here and charge you for some answers. I'm not going to charge you to look at my trading journal. And honestly, I am sitting here nearing 20,000 subscribers, guys. I will try and answer every comment and every DM I get for as long as humanly possible. I am a very busy person, but I take pride in answering every single one of you guys that reaches out. And let's be honest, guys, how many traders on YouTube can you reach out to and they will answer right away, no matter what, without charging you any money or anything like that? Take the opportunity, guys. I really encourage you. Honestly, I just enjoy teaching. I enjoy teaching people about our strategy, and more importantly, seeing the success of our community since we've launched it. It's probably one of the greatest feelings in the world when I go and help someone in DMs, and then a month or two later, they send me a funding certificate. That to me is all the gratification I need, and it's why I love DMing every single one of you that reaches out with a question. Thank you all for watching. My Discord name is listed at the end of the video, so you can shoot me a message. I hope you enjoyed. I hope you learned something in this video. If you have not already, subscribe to the channel. We're nearing 20,000 as of the time of this recording. It would be a huge help and a huge milestone for me. So thank you everyone who is subscribed, and I will see you all in next Monday's video.